Turn the off button.
Yes.
So, hello everybody. We're back with another money move. So, welcome. It's 10 a.m. Central on a Tuesday. So, we're excited to talk to you today. The whole goal of Black Swan Money is to talk to you about your money, how to grow it, in precise order, showing you how to make more money, how to save more of your money, grow it, and then also protect it. And we talked a little bit about protection last week, protecting your empire. This week, we're going to get a little into the weeds a little bit, Wendy. So let me start with, how are you doing? Did you have a great week?
Amazing weekend. Yep. It was homecoming football this weekend. So it's
Oh,
fun.
yeah. Fall is definitely in
Yep.
the air. So people are starting to get the sniffles and bring out the sweaters and long sleeves. I even got a long sleeve on right now. So, yeah, my favorite season. So I love it. I love it.
Yep.
But today we're going to be talking about life insurance, actually. But there's a lot of old life insurance out there. So we're going to talk about some of the aspects of the old insurance, which is probably what you have, and some of the new stuff that's out there and what it can do. Actually, it's not so much traditional life insurance, it's more like death insurance. And
Right.
this stuff is truly life insurance. So you can actually use it while you're alive. So tell your friends, hey, they're going to talk about our old crappy stuff and some of the new stuff that's out there and what to look for. So tell your friends, do a favor, click that little subscribe and bell button down below, and we'll get started here in just a few minutes. And we're back with Money Moves, episode number 69. So, we're putting out some content. Hopefully, you like what you see, and do us a favor. Like I said, click that little subscribe and like button. It helps the algorithms. Share it on your post if it's valuable information. Just help them get the word out. But yeah, Wendy, I'm assuming you've got life insurance, right?
I do. I do. I've purchased it a few times actually.
Yeah, and
But
that's a. Go ahead.
yeah, I would, it was typically, I think it started with my State Farm guy. It was like, you need life insurance. I'm like, okay, tell me what to get. Right. And how old are you? Are you in good health? Take a little
Yep.
exam and there you go. And I realized how underinsured I was when I met you. So
Yeah, well, there's a whole logic, and I've met a lot of people that are underinsured. I've also met a lot of people that have way more insurance than they need. But there's a whole formula behind that. We'll talk a little bit about that, but really, we're going to spend today on like everything, right? I don't care if it's cars or how you've got your house decorated. I mean, you can always tell if a house is built in like the 80s and still furnished like the 80s, right? I mean, the 80s were cool. Don't get me wrong, best music generation ever. But I want to upgrade with some of the new stuff, and insurance and financial products in general are really no different, right? And so some of the aspects of the old, it was basically, if you die, you get some money, right? And there's a lot of, everybody sees those infomercials at late night. If you are a smoker and you weigh 200 pounds overweight or whatever, you can get it for $19.99 a month, $500,000. It's like, okay, does it really? You really think that's going to play out that way? And the reason is, a lot of these companies that are out there, they know that literally less than 2% of the actual life insurance policies out there, the term policies, will ever pay out. So it's kind of that peace of
insurance
mind, but it's
companies are
important.
making some good money, huh?
Yeah. Well, but it's important for you to have. I mean, obviously, there's some gurus out there that talk about term insurance is all you need. That's a complete and utter lie. But it is for the big bulk of those insurance years, right? And how do you know how much insurance you need? Well, we've talked about this in the past, but I'll bring it up. There's a formula called DIME, like a nickel and a dime, DIME. And what you want to do is you want to take your debts. You don't want to leave your significant other, with debts. You don't want to leave them without income, right? You're bringing in an income. If you're in a partnership or a marriage or something like that, you're bringing in half or more, or whatever percentage of the income. So you don't want to just cut that off cold turkey, because the bills don't stop coming in. And so typically you look for 5 to 10 years of income replacement, right? If you're young family starting out, you got kids and debts and things like that, you probably want 10 years. If you're empty nesters on the other side of that, 5 years is fine. And then you look at if you have a mortgage, you don't want to, lose a spouse and all of a sudden have to uproot your kids and pull them out of their school system and everything because you got to sell the house now because you can't afford it. And then lastly is educational needs for the kids or final expense, right? So that's where that DIME comes into. Add it all up, boom, there you go. And a lot of people get nervous talking about life insurance, so they think, oh, I've just got to cover, my death benefit. I got to be buried. So I see a lot of companies, and I'm not naming names, but a lot of those companies with farms in the name or an uneducated insurance salesperson that'll just put you, give you a $25,000, $50,000 policy, and they think, oh yeah, you got plenty of insurance. You do to get buried. But one of the things I talk to clients about is, you're in a married situation, right? Could you afford everything if all of a sudden that other salary disappeared? Yeah, and typically the answer is no, right? Anything you want to kind of chime in on that, or?
Yeah, I mean, there's a lot to think about. And sorry, we're live, and this is what happens. I have a dog that was trying to bite me. Well, so the cameras.
I was hoping it was a dog. So
we have a new puppy, and she wanted attention. Anyway, so yeah, I think it's so funny because when we go through that formula with clients, like at the end of it, and we tell them the number, like, does that make sense? And every single time they're like, yeah, it does, right? And it's things you don't think about. Like I thought, $400,000 is a ton of money, right? When my first policy was around that. And I thought that's a ton of money. But then realizing that if something happened to me and my income was gone, and with all the kids I have, that nowhere covers anything, right? To help them move forward. And so, so it's definitely find somebody that knows what they're talking about when it comes to helping you figure out your number.
Yeah, and that's exactly right. And that way you can understand it. Use the dime formula on yourself. Just kind of take a pen and paper and kind of add it up real quickly and then compare to what you have. Yeah. And then not only that, then we start getting into the what type, right? And that's really what we wanted to focus on today is, you don't need all of that to be a permanent insurance, but you also don't want all of it to be term. And I know the gurus out there, you'll self-insure. Well, just like the term insurance pays out less than 2%, less than 2% actually self-insure, right? Because we have bills coming on, we have life going on, right? And the thing about it, that 30-year term you bought at 25, 30 years old, you're probably still going to need insurance when you hit 55, 60. And it's going to be a heck of a lot more expensive at that point if you're just strictly buying term, if you can even get qualified for it. So, that's what happens. A lot of people think, okay, well, I've got $100,000 or $150,000, or I even got it through work, so I don't really need any external. You want to own your own insurance. Trust me, the stuff at work is going to be like a bonus, right? But added into the calculation. But, looking at the traditional way we look at insurance, it's like, okay, I'm going to get a couple $100,000, get a 30-year term. I'm paying, 15, 18, $20 a month for it or whatever it is. I'm set. And they haven't actually gone through the planning process. That's why, we do more of financial coaching, financial planning, holistically look at stuff, and insurance is a component of that because it all ties together. Right. But so much of that insurance, and there's a lot of it out there, so much of that insurance never pays out. Never pays out. Less than 2%. And it's built for one thing, right? And that is, here's an amount you're covered for. If you die, we're going to pay this out in, 30, 60, sometimes 90 days. And there's something out there, and you and I were talking about this earlier when they called a Comdex score, COMDEX, Comdex score, and that's basically like the grade for that insurance company. And so many people don't realize that score exists, and so they're working with a company that's like a 75 or an 80, and it's like, okay, do you really want to trust somebody that's getting a C grade, to take care of your family if something was going to happen to you? And that's the way I equate it. I mean, it's, I was a little more into it, but, you only want to work with those 90s and above. And
how did people find out that score?
You can just go out and Google it, right? I mean, it's go to the Google, go to the all-seeing Google and ask the Oracle, and it will tell you. But just go into, type in life insurance company Comdex score. Yeah. And you'll see it pop up, and it'll tell you what their recent scores are and stuff like that. And that should help you decide. You don't
Mhm.
want to buy from a good salesperson, right? And
Right.
make that your only reason. Now, a good salesperson is going to help you and understand, but you also want to do a little research yourself. I mean, that's one of the things that, looking at the companies, is it a good company? And ask your professional, what's the Comdex score? And if they look at you like a deer in the headlights, I don't know. Then they may not know the number right offhand. So they may need to go look it up, but they should know what you're talking about when you
Mhm.
talk about that Comdex score. But that's really it. And so I don't even call that life insurance, right? Because I'm when I'm alive, I don't get anything other than the bill,
Right.
right? It's
Right.
death
Right.
insurance for my family. And like I said, it's important because, I look at it this like this, especially young people get all weird when you start talking about, oh, I don't need life insurance. I'm only 20. You know what? One of my good friends passed away at 19 in a car wreck,
Yeah.
right? You don't know when your date is.
Right.
Okay. I'm not saying you need life insurance at 19, but you don't know when your date is.
Right.
But the whole point of this is it's there for peace of mind.
Right.
Take care of your kids, take care of your family, take care of your surviving spouse or partner, right? And its whole role, and this is the analogy I use, it steps in when you step out.
Right.
When you step out of life, right, it steps in to take care of your responsibilities so everybody's, can focus on just grieving that you're not there anymore, not, oh my God, we're going to lose everything and go into financial ruin.
Yeah. And listen, we all insure our cars, right? Like
Yeah.
we don't think about it, right? Everyone insures their cars, everyone insures their homes. How much more important, right, is the value of your own life? So
My phone,
we can
I don't
insure our
have a phone.
phones. Yeah.
Yeah, I mean, it's like so many people go out life insurance because they think, oh, I'm young and healthy, and
Yeah.
look at the stats, folks.
Mhm.
So that's all there was back in the day, right? And I always tell people, I like cars from the 80s, I like cars from the 70s, especially the muscle cars, but I'm not going to drive around as my daily driver some 1979 AMC Eagle
Right.
because I bought it back in the day and paid for it, right? And I've never had an AMC Eagle. Fun looking car though. But it's one of those things that you want to constantly look, okay, what else is out there? And that's why you should be working with a professional and meeting with them, on a regular basis. But a lot of the new stuff is truly life insurance,
Mhm.
Meaning I can actually do something with it, right?
Right.
I talked a little bit ago about the term, you need more than term, you need a permanent foundation, right? And that's what I tell people, you want a permanent insurance that's going to last you literally through the rest of your life.
Right.
Most of them go out to age 120, some even further. That's your foundation. Those formative years when you've got mortgage, kids, car payments, and all that stuff, then you need that big term on top of it.
Right.
But as that term, those bills go down and you become debt free, more financially secure, and then that debt load goes down, you still need that foundation of permanent insurance. And that's where it's okay to let that term go.
Mhm.
Or if you've got some of the new stuff, you can convert it.
Yeah.
Which means you don't have to qualify for health again, right? Because people don't typically get healthier as they get older, they get sicker.
Right.
Things pop up, right? Cancers, all kinds of stuff.
Mhm.
Maybe a little overweight, a little high blood pressure because you're stressed out about a spouse or your work or kids or whatever. You guys know what I'm talking about out there. So you can convert it. I know we've talked about that in the past, and those are pretty neat.
Yeah, I think it's awesome. And to that point, the biggest thing for me is, and that I've seen, and when we first started working together, and this is something I never thought about, but people that can't get qualified, that need life insurance, but life happens, something happened, health issues, whatever, and they're no longer able to qualify for life insurance. Or if they do, it's outrageously expensive. And so it is important to get it when you're younger. And I love this new type of life insurance that can convert over. So yeah, so right now I'm healthy. I can get a policy or have a policy, right? And it doesn't matter what happens to my health. I can use that for my own benefit throughout my life and my retirement years and all of that. So yeah.
Prime example, I'm sorry, go ahead.
No, you're good.
So prime example, I had a client that they had a term policy, and he's like, man, I'd really like to be able to, do some other stuff with it. I'm like, well, I don't know what's going on. And he had diabetes. And his A1C wasn't the greatest. And so I was like, well, okay, this is going to be a challenge. And I said, let me look at your current policy. And, that's why our company on the insurance side, we work with over 100 different companies. You want to work with a non-captive because of this reason right here. And so I looked at it, and we actually found that his policy was convertible. Nice. And so he didn't even have to go through underwriting. We just picked up the phone. Hey, we want to we converted a portion of the term and let the rest of that term ride out the term, and then it expired, right? But the other stuff is convertible. And so that's a permanent policy. And it was able to do some other stuff with some other products they have. And it put him in a great situation. And he didn't have to worry about getting approved. Even though he had diabetes, he was able to do something with it. That's the new type of insurance, right?
Mm-hmm.
Also, a lot of them have something called living benefits. Okay.
Mm-hmm.
This is true life insurance, meaning you can still benefit from the death benefit, if you will, that amount while you're still alive.
Right.
You know, because a lot of people, you know, unfortunately, we're not the healthiest nation in the world, right? Cancer comes up, and sometimes, you know, I've had a friend pass here recently from cancer, and it's not a cheap experience, right? There's a lot of financial stress. You're not really pulling money in anymore. You know, the bills keep coming in, not to mention now you've got added medical costs and things like that. And so you're actually able to tap into some of these living benefits. And there's several companies out there that do it that can help offset the cost, help you, you know, pay for care that may come in the home to help you through those final bit. You know, and it's sad. I get it. You don't get me wrong, but don't think of, oh, I don't want to deal with it. You know, so many people do the head in the, you know, stick their head in the sand and the ostrich approach. It's still going to happen. So why not prepare and take advantage of these things while you're young and healthy? So again, life insurance, like all of the other different products out there, have dramatically changed. And, you know, odds are you've got some of that old stuff that's, you know, you got back in the, you know, at the turn of the century or right after, you know, that it was good at the time, but man, there's so much more out there. Plus, you're better educated now. And you understand, you know, with the stuff that we've been doing, the videos and stuff like that, nobody's going to care about you and your family and your nest egg and your money as much as you. Right. Don't get me wrong. You can meet some good coaches, good advisors that are there with you, kind of teaching you and things like that. But at the end of the day, it's you and your journey. Right. So you always want to kind of be evaluating with this stuff and make sure you're working with somebody you trust. We have a video out there on how do you choose the right financial coach, right? Watch it. But if you do need some help, you know, type down below new insurance ? And we'll reach out to you and help you out, or reach out to Wendy Lee, you know, online, or myself at Black Swan Money, and say, hey, I'd like to have an evaluation done on what I currently have. We'll do a free look. And if it's something that's in good stuff, we'll tell you thumbs up. This is good, you know, and maybe tell you where you have some gaps, or, you know, hey, this is some of that old stuff. Let's figure out and convert it over to the new stuff that you can actually use if you need it while you're alive. So it's life insurance, not just the traditional death insurance. So, Wendy, anything else to add on that?
No, you took the words out of my mouth. I was going to say we can give a free look at what you have now and see, because I think most people don't know. I was that way. I mean, when you asked me, you know, how much coverage do you have? I'm like, I don't know. How much do you pay a month? I don't know. Like, so, you know, what year of your term are you on? I don't know. And most of us don't. And now, you know, understanding how it works and what it can do, now, you know, now I pay attention and I know exactly what I have. So, so if you want us to look at it, we can look at yours and see if you're in a good position or if there's something we need to do to get you in a better one. So
there you go, folks. So again, take control of your financial journey. Put a nice little financial team around you to help you through those decisions and things like that. But everybody, again, great having you here. Do us a favor, help us with the algorithms. You guys know how YouTube works and everything. So click the little subscribe button, click the bell, make a comment and give us a thumbs up. All of the above. Show some love for Black Swan Money, because we're just out there trying to help people understand what's going on and how they can put themselves in a better financial situation on their budget. So again, Wendy, thank you for being here. We'll see everybody next week, next Tuesday, 10 a.m. sharp. And everybody enjoy the rest of your week and enjoy that fall weather. Football's here. So good stuff.